Hello, I'm Austin Wilson, research analyst at Hixon Zuercher Capital Management.
And I'm Josh Robb, Director of Wealth Management at Hixon Zuercher Capital Management. Today we're going to be looking back at January, and also I'm going to be looking forward into the year at some things that we will see happen. I know for sure.
You know for sure?
You have some thoughts.
I probably do.
Maybe suggestions,
Yeah,
or
we'll see.
But I know for sure these are events that are happening in the United States.
Yeah.
And so, globally as well. I have one for global.
Ooh, I love it.
Yes, it'll be good. But we're going to start by looking backwards at what happened.
So let's look at the markets.
do it.
We always start with the markets. January
January.
2023
Yeah.
is over. It was not near as bad as last year.
In general, yeah.
In general.
It was a good,
So the S&P 500 up 6.6%.
Yep.
The Dow up 2.9%. The NASDAQ up 11.5%.
Wow, that's a big move.
Developed international stocks up 8.2%. Emerging market stocks up 7.9%. Bonds up 2.7%.
There you go.
So a lot of the pain from 2022 had turned a little bit and got a little less bad if you look at it, including January.
Yeah.
So that's pretty good.
Yeah, and I saw something like that was the third positive month of the last four.
Yeah.
So
Yeah, exactly.
all right. So we're going to look at a couple events that are coming up in 2023. The first one is Disney and Warner Brothers are both turning 100 this year.
100 years
they're
old.
celebrating 100 years.
It's a lot of years of making films.
Both companies obviously are going to take advantage of that and use that as
Marketing.
promotion and marketing.
Oh,
Warner Brothers used to be. Now they're Warner Bros. Disney because of the merger. But, their Looney Tunes is kind of one of their classics that you think back on. And then obviously Disney with all their fun stuff. So I anticipate a lot of things releasing this year on, nostalgia on some of the old things that we used to watch as kids.
I love nostalgia. Saturday morning cartoons.
Oh, man.
Just the classics.
Just the good stuff.
Like, give me Roadrunner, Bugs Bunny, all that stuff. That was the
There's
stuff.
where it's at.
All right, inflation.
Inflation.
Could talk about it a lot, but it's going in the right direction because December inflation data came out in January. It came in at 6.5% year over year. Now, that's still high historically, but it's been moving in the right direction for many months now, and that's good. So that was down from 7.1% in November. So if you take out food and energy and we look at what's called core inflation, that was at 5.7% year over year, which was, again, down from the prior month, which was 6%. So moving in the right direction on inflation.
Good deal. I'm glad to hear that finally.
I am too.
Yes. I saw a article that was talking about a lady purchased the same things in 2020, 2021, and 2022.
Yeah.
All right. And she had a receipt, so she just went back to the store and bought those same things. And
Was it like a Lamborghini or something?
no, it was just grocery stuff.
Oh, okay.
But just to show inflation, right? Because you always hear about it. They talk about a basket of goods, but she literally had a receipt from 2020 and then went back and back.
Yeah.
And then I think she actually did it at the beginning of this year, too. But the idea was it was up almost 50%.
Oh, yeah.
Crazy.
Groceries, for sure.
Groceries, yes.
Eggs.
Just those, and it happened to be what she had bought,
Yeah.
Wasn't
You know
anything
how
particular.
expensive eggs have gotten?
Oh, it's crazy.
Our family, now there's 3 of us that eat food.
Yeah.
One is baby. She doesn't eat food, obviously. So we literally will eat like a dozen eggs for
Oh,
breakfast.
yeah.
And that's like $5 now.
I know. Yeah.
Now, it's not that expensive for food, but
when it was 79 cents.
I remember going and getting a dozen eggs on 79
It's like $1.
cents. Like, oh, man.
Yeah. That was like
So-
easy, cheap protein.
I love eggs.
Yes.
I love eggs. All right.
That's the same as our family. There's 6 of us at home.
Oh, you would eat 3
So,
dozen eggs.
If you make pancakes and scrambled eggs, there's a dozen right
Mm-hmm.
there. It's gone. So,
And we love eggs.
yeah. Another
All right.
celebration.
Oh,
And
it's
this
not your
is-
turn again?
Yes. It's my
Okay.
turn. Another
I was
celebration.
getting itchy.
Celebrating the death of Pablo Picasso.
Pablo Picasso made some
Do you know when he
interesting,
passed away?
interesting art. 1940 something? I don't know.
I know. I thought it was a long time ago. 50 years ago.
50 years ago.
Yes.
Oh, really?
1973
Ooh, wow.
is when he passed away.
Yeah.
So he was obviously born before that, but
Yeah.
it's not that. I mean, I think you see the art in the museums and you're like, oh, that was probably a long time ago.
It was,
50
but not
years?
that long ago.
Yeah, it's not as long as I thought.
Dude made some weird looking art.
Yeah, it was
Some out there.
It left an impression on me. Yeah.
Yeah?
Yeah.
All right, number 3, the Fed. We'd always like to talk about the Fed, too.
Yes.
So they delivered on February 1st.
February 1st.
Another rate hike. How big was it? 25 basis points.
Ooh.
0.25%, which was down from 50 basis points or 0.5% that we had recently had, and then a block of 75 basis point rate hikes before that. So the Fed is easing on their increases of interest rates in terms of their attempt to slow the economy, in really an attempt ultimately to bring down inflation. So they're slowing the pace of rate hikes. They have signaled probably one or two more ahead. The market is pricing in rate cuts, actually, at the end of the year. The Fed seems not so sure about that. Yes. So there's a little bit of a dissension between what the market's saying and what the Fed's saying, and that has caused some of the volatility that we're seeing in the markets over the last really year or so. So there we go.
Do you think the Fed ever gets frustrated because they're like, how much clearer can we be? We are saying more is coming, and no one's listening.
When I watched the press conferences, Jerome Powell, Fed chair, gives these press conferences right after they release what they're going to do, and I wonder if he's watching the market on its screen while he's talking.
His iPhone right there.
He's listen, I'm saying I'm giving you a bunch more rate hikes, and we're not going to be cutting anytime soon, and the market's up 5%. Yeah. That's not.
I wonder if there's betting too on how many times he'll use a certain word or something. And,
probably. Oh yeah. So that's the Fed.
All right, we're gonna go global for a minute.
Okay, I like it.
These next two.
Yep.
All right. In the spring of this year, King Charles will officially be crowned and made the king. Obviously, he is, but they have their official ceremony scheduled for this spring. It's a day off for everybody there to celebrate and.
What about us?
Make that transition. Not us.
Oh.
No, we
broke away from that.
TV.
We broke away from that king
thing. Oh, yeah, look at that. So everybody raise your tea glass to them and
put your pinky out. Do your thing.
Yeah, I guess long live the king now instead of the queen.
That's a weird change. Yeah. Huh.
Yep. So that's this spring. I think in May.
Gotcha. Number 4. The average rate of a 30-year fixed-rate mortgage has fallen to 5.99%.
Okay, below 6.
It's under 6%. The rate started. Really, at the end of January, it was around 6.2%. And then after the Fed conference, when Jerome Powell was talking, the rates had come down a good bit because he mentioned that inflation has eased somewhat but remains elevated. So to put that into terms of what that impacts, dollars for houses, for someone buying a $400,000 home today with a 20% down payment, the monthly payment is $293 less than it would have been in October.
Wow.
So that's not nothing.
$300.
Yeah, that's not nothing.
Do a lot with that. All right, one more international. Something I will be paying attention to this summer, late summer, early fall. The Women's World Cup.
Women's World Cup.
Yep, every 4 years, and they're on a rotating schedule with the Men's World Cup.
Yep.
So they'll be in New Zealand, Australia. They're actually co-hosting.
Gotcha.
Yeah, so it should be good. The U.S. women's team obviously has had success,
pretty good.
So they're hoping to continue that this year.
Football is life.
It is.
That's what Danny Rojas says on Ted Lasso.
July, August.
Sounds good. And fifth and final thing I'm going to talk about is President Biden's student loan forgiveness plan is going to be challenged in the Supreme Court this month.
Yes.
So 6 states have brought more than 6 different lawsuits to the court's attention to discuss. Those arguing for the suits, so against the plan, they are saying that the administration overstepped their jurisdiction by offering to cancel the loans without Congress authorization. But those defending the plan say that they had the authority under the HEROES Act of 2003, which grants the U.S. Secretary of Education the authority to make changes to federal student loans during national emergencies in which COVID-19 is still considered active
and haven't ended it
yet. Yeah, and a national emergency. So that's going to be going to the Supreme Court, and stay tuned on more for that.
Yeah. All right, my last one is something that's interesting.
I love interesting
because
things.
We are impacted by this.
We are.
All right?
Are we?
So, potentially, this year will be the last time we have a time change.
Oh, I'm loving that.
Because they passed the, let me get the bill right, the Sunshine Protection Act, because, sunshine needs protected.
The SPA.
Yes, the Sunshine Protection Act, which was passed actually in March of 2022, which would make daylight savings time permanent in the United States.
So it wouldn't even really be daylight saving; it would just be normal time.
Well, but we would move to the daylight savings and then leave it.
Which would be the
spring forward.
Yeah, the way we are in the summer.
Yes. So
it would be all the
when
time.
we make that move this year, that spring forward, it would then stay.
I'm so excited about that.
Crazy. Yep.
Because, I do like my fallback hour.
Yeah, you get that hour.
But the spring forward is terrible, and why would we need to do this? We don't need to.
And just the hassle of changing all your clocks. I mean,
I know.
The time saved alone is probably in the billions of dollars.
I know, and now I went from wearing smartwatches to real watches, and now I have a handful of watches that every time the time changes, I'm like, oh man.
Yep. Now, one of the proponents of the bill was Senator Mark Rubio.
Yep.
And
Florida.
he said, Republican in Florida,
Yep.
he said that changing that would lower the number of car crashes, accidents, and reduce robberies by 27%.
I've also heard like heart attacks on the spring forward specifically, very elevated.
True.
So we're doing this for people's health, obviously.
Safety.
Come on.
All right.
Well, that's good to know. Well, thank you for listening this month. We are excited that you were here. And please remember, nothing we talked about is a recommendation, which some of those, I don't know how they could be, but we have to say that anyway.
One is, you need to watch the Women's World Cup.
Watch the Women's World Cup.
I recommend it.
Exactly. So, but if you have any questions about your financial situation, feel free to give us a call at 419-425-2400 or email us at hello@theinvesteddads/hzcapital.com. I'm going to say that real quick. Or email us at hello@hzcapital.com. And until next month, have a great one.
All right, talk to you later.
Bye.
Josh Robb and Austin Wilson work for Hixon Zuercher Capital Management. All opinions expressed by Josh, Austin, or any guests are solely their own opinions and do not reflect the opinions of Hixon Zuercher Capital Management. This is for informational purposes only and should not be relied upon for investment decisions. Clients of Hixon Zuercher Capital Management may maintain positions in the securities discussed. There is no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Past performance may not be indicative of future results. Indices are not available for direct investment. Any investor who attempts to mimic the performance of an index would incur fees and expenses which would reduce returns. Securities investing involves risk, including the potential for loss of principal. There is no assurance that any investment plan or strategy will be successful.